Yeah, well, what I'm going to talk about is the International Accounting Standards Board, essentially, and particularly its conceptual framework. That's the way it analyses problems, its set of assumptions that it makes. I was on the International Accounting Standards Board for the first 6 years of its life, and when I left, I sort of reviewed the conceptual framework and all the dissents I'd made on standards, because sometimes members are allowed to write a dissenting view. And so I did a critique of what I thought was wrong with the framework that was being used at the time. Since I left the IASB, strangely, they've come around more to doing what I would have done. When I was there, I singularly failed to persuade them. But, and what I'm really going to talk about mainly is what they've done in the last 6 years since I left the board, the trends in their thinking, the change of emphasis, particularly in reaction to the financial crisis, of course. And we'll then consider at the end where this leads us for the future and what should happen to the conceptual framework or what should happen to the IASB, because there is a danger that it becomes too much creature of circumstances. It gets pushed too much by pragmatic political forces, and we need a conceptual framework, but a good one, to guard against that. That's a rather long summary. But, you know, there's the story about the person who didn't have time to write a short letter, so wrote a long letter. And it's a bit like that. I should have thought about it. Anyway, it's about the conceptual framework of the IASB.
This conceptual framework is now there is a draft about some part of the conceptual framework.
Yes, which and that was what started me on this, not mission, I don't know what you'd call it, but I was a member of the board when 2 of those chapters were drafted, and I dissented very strongly from some of the things in them, and I still dissent from them. And I think it's unfortunate that built into their future work are some of the assumptions there. I think they're not dreadful, but they're the wrong emphasis, and they could do a lot of damage to the IASB's work, particularly the neglect of stewardship and accountability. The idea that accounts are accountability of management or directors to their shareholders, that's completely lost in those chapters.
And what about measurement?
Yes. Measurement is an important issue in the framework. It's an unresolved issue. It was unresolved in the original IASB framework and in the FASB framework, the Financial Accounting Standards Board of the United States. Of course, the work that the IASB is doing at the moment is convergent with FASB. So it's an issue that's been left open, but also it's an issue that runs very deep in this conceptual framework more generally. What I call the fair value view of life is to do with one's whole view of markets and what accounting's for. The idea that fair values exist in markets and all the accountant needs to do is to measure the fair value and then all problems in accounting are solved. I believe that accounts are there to inform markets, not to tell them what they should value things at, that markets are incomplete, they're imperfect, they're uncertain, they're illiquid, and for all those reasons we can't identify a single market price that's always going to be the right thing for the accountant to report. Sometimes selling prices, which is what fair values are, will be relevant. Sometimes current buying prices may be relevant if I want to see what the profit margin is, for instance, that I'm making at the moment. Sometimes historical costs will be relevant because historical costs do have a very important role in stewardship. They tell you what actually was paid for something. And when you sell it, the difference between what you paid for it and what you sell it is the ultimate test of whether you've achieved a profit or not.
Okay, and what is your perception about the fair value? What because some comments about that is that in this crisis
Yes.
situation, there is a problem.
Yes. Yeah, I don't think, I have another talk, which I can give you after that, you know, because I know you have great appetite for talk, but might take all evening, on whether fair value caused the financial crisis. I think it didn't help. I think some aspects of fair value and its use by regulators didn't help in the financial crisis. I don't think it caused the financial crisis, though. But I don't think fair value is a universally valuable measure. Some people do. They think that what we should aim for in accounting is always to measure fair value as a selling price. And I don't think that is the case, as I'll try and explain in the talk. I think that fair value is useful in some circumstances. It's particularly useful for financial instruments, by the way. And some of the banks have been throwing criticism at fair value are really looking to divert attention from their own mistakes. They've made mistakes and the fair value of the assets they've got is low. They can't sell them for what they paid for them. And if they did sell them, they'd make a big loss, even in historical cost terms. And they try to blame the fact that they're being asked to evaluate the fair value. They try to blame fair value for that, whereas it's called shooting the messenger in England. You know, if you don't like a message, you shoot the messenger. Medieval kings were very bad about that. They used to shoot the messenger. And I think the bankers are like that with fair value. I don't think fair value is a universally good thing to do. I think it's good in some circumstances, but I don't think it caused the financial crisis.
Okay, thank you very much.